All right. Good morning, Checkmate crew. All right, it is opening bell 9:30 a.m. here in New York City. The market just opened. Thanks for joining Checkmate Trading. Let's just get right down to business. All right. First things first, I did make some changes to our positions. I did open up the October 21st 8 puts. All right. It's a lotto. It's a lotto position. Okay. I announced it at the end of day yesterday on Discord. Okay. For those of you joining us on YouTube and Twitch, we do have a Discord. The links are in the description box. It is completely free. No paywalls, no sub fees. Join us, join the conversation. I send all the alerts out live to everyone, okay? There's no risk. Hey, what do you have to lose? Join us. Okay, so that's that. So that's the only position that I added to after I took those profits from our QQQ puts. So the profits on those QQQ puts, I put them right here. So technically they're free. So I'll let them ride for a couple of days and see what happens. Okay. As far as news is concerned, yesterday, as everybody knows, we had a doozy of a day. You know, the S&P 500 was down more than 4%. The NASDAQ was down 5%. So it was a rough day for equity markets. And again, I put this on Discord. Our liquidity data didn't really change all that much. Surprisingly, it really didn't. If you look at our AD line, on our junk bonds AD line, the decline was about 2 days worth of advances. Okay, actually less than that. All right, so the decline was minus 695, but we were actually exactly minus 695 for 2 days prior. Our 2 days prior in advances was plus 695. The 2 previous days before yesterday's close. So it evens out. So in the last 3 days, it's been neutral. All right? It's been flat for the last 3 days. So the liquidity data is actually saying that it's not deteriorating that quickly. All right? So that's actually pretty interesting. That means I think we're getting closer and closer to a change in the long-term trend. And this is actually very normal. Whenever we switch from, let's say, a downtrend to an uptrend, or an uptrend to a downtrend, whenever we change the longer-term trend, all right, we do see these big equity movements while the internal data doesn't really change all that much. All right. I'm not going to call the Moab yet. All right. I'm not calling it yet. But I think we're very close. Okay, we're very, very close. Only thing that's keeping me back is this. This is the high-low line. The high-low line did go down, but not by much. Okay, today it can recover. All right, especially if we have a big positive day from high versus low. For now, we don't. But if we do later on in the day, if we close that way, this could start turning up. It could. Okay, let's see what happens at the end of the day today. All right. If you look at also our advanced decline lines for the New York Stock Exchange and for the NASDAQ, it actually made a higher low. Okay, it's another higher low. So, so even though it was, percentage-wise a big drop in the indices, even the advanced decline didn't really change all that much. The advanced decline on the stock exchange, on the actual NASDAQ or the New York Stock Exchange, that didn't change much. All right. So the junk bonds advanced decline line didn't change much. Neither did the NASDAQ or the New York Stock Exchange. Okay. So again, these are clues. All right. I think we're getting close. All right. I'm not gonna call it yet, but we're close. All right. We shall see. All right, let's see how the day ends today. Let's get through OpX first. Let's get through this monster September options expiration, and I think then we'll have a little bit more clarity on what happens. Next week is FOMC So let's see what the market expects. With the market right now, the chance of a 1% rate hike is increasing. All right. So this is a 75 basis point rate hike. This is a 100 basis point rate hike. All right. It looks like we actually have a chance at 450 or so. So after a 75 basis point rate hike, it looks like the market is pricing in, let's see here, but another 75 basis point rate hike for November, and then possibly a 50 basis point rate hike for December. All right. That's just what the market is pricing in based on the Fed funds rate so far. This changed drastically overnight, by the way, drastically. Okay. So there's a lot of moving parts right now. And again, that's the whole reason, this plus the New York high-low line, that's why it's really hard for me to call the Moab right now, because who knows? What if the Fed comes out and surprises with a 1% rate hike on next week? I can see the markets having a little bit of a volatility because of that. All right, and trying to bet on what the Federal Reserve is going to do is a fool's game. Okay, well, betting money on it is a fool's game. All right. TIP TLT, this is our forward-looking inflation expectation. Not much. It actually dropped after the report. After the report, it actually dropped. All right. So it doesn't even look like the bond market really cared all that much about that quote-unquote surprise increase. Doesn't really seem like it. All right. And again, as far as our, one of the bond, signals that we also have is the ZF, the 5-year Treasury note. It actually, to the tick this morning, right before the PPI report came out, to the tick, all right, because yesterday was a CPI, today is the producer price index, PPI, and the PPI actually came out on the consensus number, which was negative 0.1 month over month. So now we have two back-to-back months of negative PPI reports. The CPI report is the most backwards looking out of the two. Okay, the CPI looks about 3 or 4 months back. PPI is about 1 or 2 months back. All right, so we'll see. I still think that in the October November reading, we might get a negative CPI report. All right, but this morning to the tick, ZF touched the June lows and is now going back up. And again, if this is going down, that's cash, dash for cash. If it goes up, cash is trash. All right. If we see this coming up like this, money managers will have a harder time putting excess cash into money market, different money markets. Okay, it'll just be not as favorable. So if we start going up like this, I think that equities will start rising and we'll see a rise in the VIX. Okay, because instead of selling shares, they're going to hedge with puts. Okay, so let's see if this bounces. If this bounces near the top, or it creates that huge wick down, that would be an exhaustion signal on the 5-year Treasury note futures. All right, so I'm going to be watching this today. The chart of the day is ZF. ZF is the chart of the day. If you're going to look at one chart today, all right, if you're only going to look at one chart today, it's going to be this. Okay, it's going to be the ZF. All right, again, going down, dash for cash, go up, cash is trash. If cash is trash and you need a hedge, they're going to be buying puts instead of selling shares. Okay, so we might see the equities indices go up, but then on pullbacks, we'll see outsized VIX spikes. All right, something that we've actually been anticipating since June. All right, it's something that we've been looking forward to, and that is going to be probably one of our signals that the Moab is close. Moab, MOAB, mother of all buy the dips. All right, that's what we're waiting on, the mother of all buy the dips. Okay, so that's what I see right now for the bond market. 30 and 10, It is coming down, so it does look like as if the market is pricing in an overly aggressive, hawkish Fed. All right. If we do see the CPI report come out much lower, which I do think it's going to happen in October, November, what do you think the Fed is going to do? All right. I still think that a pivot is very possible around October, November. Okay. I think it's going to be October, actually. I do think that we might see a pivot. Who knows, though, after that pivot, it may be January, February, March when inflation comes back. Will they get hawkish again? We'll see, okay? But right now, the 30 and 10 is still going down. 10 and 2 also going down as well. This affects the profitability of banks and their loans, okay? So usually when we see this come up, if, right now, technically, this is still, I mean, if it can recover today, that would be a higher low. If it can recover today, if it recovers today, that would be a higher low. If this keeps going up and in an uptrend, we could see XLF make a huge recovery. Okay, we could see XLF give us a little pop. If XLF goes up, Dow will come with it. Okay. So that's something to look at. I'm not going to be trading XLF, but for some of you out there looking for day trades, that might be something you might want to look at. Look at the 10 and 2. If we start seeing the 10 and 2, having an uptrend, maybe then you could start maybe getting into some spreads on XLF. All right. So that's what the bond market is telling me right now. Again, the liquidity data is not deteriorating. It wasn't as bad as, what a down 5% equities day should look like. Yesterday at the end of the day, I really thought that this chart was going to be way down further. I thought this junk bonds ADL was going to tank, but it didn't. All right. It's neutral. Last 3 days is neutral. Okay. So I think we're starting to see underlying liquidity data improve. All right. I just need to see this. This would be a great confirmation to have. All right. I'm just not seeing it. Okay. Also, too, if we are to see the euro go up, and again, the euro, I mean, it made a huge move down, but right now we're basically where we were 3 sessions ago. Okay. If it can recover and the dollar can also, let me see here, if the dollar can also come down a little bit, that would definitely raise the ceiling on the equity markets. Okay, so that is something to look at. I'm going again. I think the chart of the day is ZF 5-year Treasury. Okay, take a look at this 5-year Treasury. If we break this though, if we break these June lows, and again we were just there like a couple hours ago, we were at the June lows. If it breaks those June lows, we're probably then going to see fresh new lows in the indices. Okay, if that ZF, if it breaks those June lows, expect the indices to break their June lows. All right, so we're close. If it breaks that, it keeps going down, we're probably going to see this level come back, maybe even lower. Okay, and so again, my plan still hasn't changed. All right, here at that old lows on SPY, which is around 360, 361, 362 or so, that's 15.5 times forward earnings. That's where we saw huge institutional bid. I think that if, especially if the Fed funds rate and the Fed funds expectation is for 5%. If we see 5%, like what William Dudley told us back in May, we might not see the institutional bid come back until around 345 on SPY. And that is where I'm going to do most of my SPY share buying. I'll buy a little bit at 361, 362, but I'll save most of it for 345. Again, that plan has not changed. Okay? One thing I want to go over today as well is commodities. Oh my goodness. And this is probably one of the craziest things I've ever seen coming out of the White House. I'm not trying to diss on any politician. I'm not dissing Biden, I'm not trying to make a political stance or anything like that, but I am criticizing his staff, all right, the White House staff specifically. The White House staff came out sometime yesterday, and they said that they will be restocking their petroleum strategic reserves by buying oil at spot price $80. Okay, so basically what they did was they announced where they were going to buy, basically announcing where there's free money in the market. I don't know why they would do this. That is a huge no. You don't do that. You don't announce where you're going to buy the strategic reserve price. No, nobody has ever done that. That's crazy. I don't know why they announced that. Now, it's probably never going to get to that price because everybody's going to try to front run that now, okay? Everybody knows the U.S. government is wanting to buy oil here. Actually, it's not really there. The spot price is actually a little bit higher than the futures contract price. All right, so remember that $75, $76 level? It just so happens to be that when the futures price is at that $76, $77 level, spot's gonna be at 80. Boom, there you go. I mean, so our buying levels, so, you know, I said if I'm gonna go long on the crude oil futures, I would be doing it around 76, 77. That's basically where the White House staff said they're going to buy oil on the spot market to fill up the strategic reserve again. So I highly doubt it's going to get to that point, probably like within $1 of that or something, and then people are just going to massively buy it, thinking that the U.S. government is going to buy at that level. I don't know why they announced that. Not a good idea, but they did. So I don't know if it will get there, but if it does, you know, I'm definitely now seriously considering buying oil at 76, 77, especially after that. You know, but we'll see. We'll see even if it gets there, okay? My plan still hasn't changed on the short side. I'll still short here at the edge of our price structure, 115 to 120. I will still buy some put spreads on the way down, all right? So nothing has changed. It just reaffirms that 76, 77 on the futures market, though, for oil, all right? Other commodity news, since we're on energy, nat gas, coming back up again. I don't know why it's coming back up again like this. I don't know if there's if it's weather related or maybe it's, you know, maybe it's preparation for front running for winter. Not really sure, but I just noticed that today it's up about 6.4%, which is usually, you know, it's not good. Usually it's very correlated to also the European natural gas market. And for our friends in Europe, you know, if you guys have a harsh winter this year, it's going to be really tough. It's going to be really tough for you guys if we have a harsh winter. So my heart goes out to you guys out in Europe. As far as commodities news, there's one piece of news I think as commodities traders you guys have to look out for. There is a potential union strike in the railroads, okay? So why is that important? Right now, by Friday, if they don't reach a deal, there might be some trains that have to some trains that have to stop, and a lot of those trains are carrying soy meal, soy, corn, and fertilizers. Okay, so that might add to the inflation story. We are seeing soy and soy meal having some, having a little bit of strength on this news, especially soy meal. I believe that's ZM on this. Is it still ZM on this? Yes, it is. Okay, so ZM, we are seeing a little bit of a rally because of that in soy meal. And, you know, that puts some pressure on meat prices as well. So meats are also up today. Oh, well, hogs were up a little bit more today, but I guess it's coming back down. So we'll see what happens if we do see large-scale strikes. I do think fertilizer prices are going to go up. I think right now there's about 6 more weeks until Midwest farmers need to put fertilizer in their soil for the next planting season. So if that gets disrupted, who knows then? Maybe next year's corn crop may not be so good, because then more farmers will probably be likely to rotate out of corn and into soy because they don't have the right fertilizers or the fertilizers get too expensive. So that's something to monitor. I'll be monitoring that closely this week. So I'll report to you guys if I see anything on that front. All right. As far as other, indicators, I mean, right now, HYG is still trying to make a recovery. It made a huge dip down. Let's see what our ADL line says. Junk Bonds ADL line says later on today. I think today's trade is going to be very interesting. Again, I said this yesterday. If TIP TLT makes new highs, we're going lower. All right. Right now, it's kind of still in this, I guess, new no man's land. If it breaks down, then I think that's a very good sign that maybe our next CPI report won't be so bad. And again, after the CPI report came out, we saw this red candle. So you can take it as you want, but I think it was. I don't think that it was that big of a news. I think the market was going to go down and retest those levels due to options positioning and impetus. That's all. It's a low liquidity market, so things like this can happen. All right, it's September too, so seasonally these things happen. Also too, when we're in a major downtrend and we're expecting the major downtrend to change at some point, usually when we're at a point where major trends are changing, we do see, that where there's big outsized moves in both directions. All right. So again, I think we're getting closer and closer to that MOAB signal. This is our growth versus value chart ratio. If this keeps going down, that means that our value stocks are going to outperform growth stocks. All right. So we saw the NASDAQ really tanking yesterday. I think it did about 1 percentage point worse than the S&P 500 did. So this has been a very good indicator, and this is the reason why when I bought puts, I bought QQQ puts, because I saw this growth versus value coming down. So I knew that if we're going to see a sell-off, it's going to be much worse in growth stocks than in value. All right, and it turned out well. Our QQQ puts did actually very well when we cashed out yesterday. So again, this is something, these are indicators we've been looking at for a while. Keep looking at it. Check on them at least, once a day. I know some of you guys work, so at the end of the day, save some of these to your watch list and just take a look at them once a day. All right. Closing prices is what matters the most. Okay. During the day, there's a lot of noise in these charts, but closing prices are, as far as indicators, in my opinion, they're very good. Okay. What else? Let's just go run through our plan one more time. As we always do, let's just look at some of the stocks we have in our plan. Ford. Let's see if this is just a dead cat bounce or not. If it is, I hope, quote unquote, hopefully it is, and it gets to our 1380. If it does, I'll be buying at 1380. Intel. We've been talking about Intel before. All right. I think, though, if tech sells off anymore, there's more pain ahead, and it won't, just because its valuation is low doesn't mean it can't go lower. All right. So I for Intel or for any tech stock, I do want to wait for the MOAB to buy more. Okay. The mother of all buy the dips. Hut. I mean, Hut was literally 10 cents away from our buy level a couple days ago, and I thought about chasing it. Maybe I should have, but if it falls back down again, I'm waiting for that 165. I might buy some more of this. All right, I might buy some more of that. What else? UUUU, our uranium play. Oh, it's up today. Dang, it really doesn't want to get back into the sixes now, does it? I really was hoping for it to get down into the sixes. We'll see. Australian dollar. Oh, wow. What a recovery. It was down. And now it's trying to recover this pivot right here, this pivot point right here. So if it closes over that, that's an exhaustion signal. We might see the Australian dollar go way up. And if that happens, then watch out. Metals are going to do very, very well. So, our UUUU might do very well too. I still have on UUUU, I still have the covered calls for 10, the 10 strike covered calls, and I do have the 6 protective put that I bought with the premium. So I do have a collar on it. So if it does drop down, I will cash out of my hedges and buy more shares with that. Okay. We'll see if it gets there. We'll see. All right. I already went over my index plans for SPY. Don't need to go over that again. For UVXY, I am hoping, it's because of the Bollinger Bands, but yeah, for UVXY, if my puts double, I am going to get out of those. All right. When the puts double, I'm going to get out of those, especially if ZF goes up. Because if ZF goes up, that means, again, cash is trash. So instead of selling shares, institutions are going to be buying puts. So on every pullback, we're going to see outsized moves in the VIX. All right. So this is really just playing the quote unquote dead cat bounce in the indices. Maybe VIX falls a little bit. And if it does, I'm sure these puts will do well. Again, I'm looking for double. After they double, I'll be completely out of them. And then, we'll reassess and see what happens after that. Okay. Any questions, comments, rude remarks, anything else you guys want to see? Also, let me know how you guys like the new format of the videos. I don't know if you guys noticed, but for the last couple of days, I've been trying to keep the videos to about 25 to 30 minutes. That seems to be where I get the most positive responses on these videos. So I'm trying to keep it as neat and clean as possible, just giving you the most essential information for that day or for that week on those episodes. So let me know if you like that. If you like the more drawn out explanations, where I go deeper into each topic, I can do that too. But let me know how you like the new shorter videos. And if this is what everybody likes, I'll try to keep the videos down to 30 minutes or so. All right. But any questions on equities? Oh, and cryptos. I forgot about cryptos. For cryptos, we still have that merge. The merge is planned for later tonight, early, or tomorrow early in the morning in the East Coast time. As far as the positioning is concerned, I'm not seeing any new type of positioning. I mean, we did see some, a little bit of block trades, but there's small block trades. They're very low premium. All right. So I'm not really seeing any big changes in our Ethereum options positioning. I think a lot of people are holding out until this merge. I think the bets already have been placed. There's very, very delta positive on the March and December contracts, and we're seeing, a little bit of a negative delta on September. And we'll see if that holds, all right? And so if the merge comes out I think we could see a little bit of profit taking, especially those people in the December and March contracts that might sell their calls. If that happens, that would be, and if we get that plus the liquidity conditions improve. So let's back up. After this merge, all right, if we see a lot of calls for December and March getting sold and Ethereum prices come down, yet our underlying liquidity conditions are improving, that may be a good opportunity to start nibbling on some longs on Bitcoin and Ethereum. Okay, so I might do that. All right, but again, there's all those conditions. All right, merge has to happen successfully. We have a sell the news because people cash in their calls, all right? And while that happens, our underlying liquidity data, which is the New York high-low, the junk bonds ADL, and all the New York Stock Exchange and NASDAQ ADL that we track, if all of those are not getting worse and they're improving while ETH sells off for sell the news, again, I might start nibbling on some ETH and some Bitcoin, okay? So that's the updated plan for cryptocurrencies. Anything else you guys want to look at? Going once. Going twice. All right, sold. Okay, guys, in that case, that will wrap up our morning call. Again, I'm going to put this on I'm going to put this on YouTube soon. And guys, if you're not already part of our Discord, hey, the link's in the description box below. Click it. Again, there's no paywalls, no subscription fees. It's all free. We have great traders and we bounce ideas around the clock. So join us, join the conversation, guys. All right. If you like our video, like, subscribe, and comment below. I try to respond back to your comments and questions on YouTube as well. I'll see